A very, very warm welcome to all of you in this live coaching class. Today, we're discussing capital gain. This is our second part. Up till now, we've discussed what is transfer, when is capital gain taxed, and what are the capital assets, along with what are capital assets, along with that, when are they short term and when are they long term. This was all we discussed in previous class. We started section 48, where we discussed about full value of consideration. We just discussed how to compute the capital gain, but today would be what we'll take it forward from. So before we start, I welcome you all again. I hope you had a great weekend. And any queries you have, you can put it in your query session. Naveen Chandra Gajar, for the PGPP questions, if we have any, we'll try taking in tomorrow's class or maybe in the day after tomorrow's class. Just remind it again. Okay. So let's begin at where we left. When you are doing any capital gain computation, remember it is full value of consideration is the word which you use. It full value of consideration is the word which you use, FVOC. Even if you will not, even if the sale price is given, even if the net sale consideration is given, you will use the word full value of consideration, which can be the sale consideration, which can be other stuff depending upon the various situation which we will learn. Minus transfer expenses. You transfer expenses like brokerage, commission, which you give on transfer. You will get net consideration. This net consideration is what you have received or is deemed to be received. Then there is cost of acquisition, which you have to reduce, cost of improvement, which you have to reduce, cost of acquisition and cost of improvement that we discussed, that the cost which is there on acquiring that asset, the cost which is there on improvement of that asset. You get capital gain. And then there are certain exemptions. And after that, you get taxable capital gain, LTCG or STCG. When there's a long-term capital asset, there are certain times you have to index, or whenever there's a long-term capital asset, this cost of acquisition becomes index cost of acquisition, and this cost of improvement becomes index cost of improvement. So first of all, whenever a capital gain question comes, you have to look for whether it's a transfer or not. If you first you have to see whether it's a capital asset or not. Then if it's a transfer or not. First two things which you have to see in the question are these two. Then on the capital asset, you see whether the capital asset, depending on the period of holding, is a long-term capital asset or a short-term capital asset. That will depend upon the nature of the asset. So debentures would be long-term when they are sold after completing 36 months. So is the unlisted equity shares would be long-term when they're sold after, try remembering it, 24 months. Okay? Or 2 years, whatever time period you can write. But you have to write all of these things in your working notes. Because if you need to get full marks in a question, write whatever you think you know. But paper checker is a person who just is matching the answer, does not know anything about the income tax. Write it from that point of view, that you have to tell him why are we considering it long term, why are we considering a particular thing long term, why are we indexing it or not. Okay, so we ended here that you have to take index cost of acquisition and index cost of improvement. First, let's learn what is index cost of acquisition and index cost of improvement. So students, now on we'll be doing 3-4 sections in togetherness. Section 48, which is mode of computation of capital gain. Section 55, cost of acquisition, and section 49, cost of acquisition in certain circumstances. So these 2-3 section and cost of improvement, section 56, will be done somewhere around one or together. So let's try to understand. First, let's understand cost of acquisition for general assets, and then we'll discuss certain exceptions to it. A cost of acquisition ka indexation, if I tell, what is indexation? As discussed, if you're selling an asset today and you're taking a cost which is there or which was there even 15-20 years ago, it will not have a real gain. Why? Because there is inflation. If there is inflation, and unnecessarily you would be paying tax on a higher gain, which actually is not the scenario. I took something for 10 lakhs in 2002. Today its value is 25 lakhs. But is there an actual gain? What you have to see is you have to bring that cost to today's price. Then only you'll see that there is actual gain or not. Right? Then only you will see there is actual gain or not. So to bring that cost on today's price, we or the current price or the current scenario, we do a cost inflation index calculation. So you would be given in question a CII, cost inflation index, for particular financial year. For each financial year, you would be given in question. Obviously, you may not be given this full chart, but what would be given to you are the cost inflation index of the years which are relevant for your question. But this you have to remember, this may or may not be given, but this you always have to remember is the cost inflation index for your current year, which is 21-22, which is 317. Now what is this? Let's try understand. So suppose I have purchased an asset in 2014. I have purchased an asset in 2014 for 10 lakhs. So first of all, and I am selling this asset today. This is a very basic thing, for a consideration of 30 lakhs. Will you say it's a capital gain of 20 lakhs? No. First, you will see whether it's a long-term capital asset or not. So first, let's understand this is a jewelry. Is this a long-term asset? Yes. Why? Because more than 36 months. The moment it's a long-term asset, I will go for indexation. And indexation, how will I index this cost? Indexation is there as per your second proviso to section 48, which tells about computation of capital gain. So 10 lakhs I have to index. So 10 lakhs is the value when cost inflation index was 220. Okay. But now today, when the cost inflation index is 317, I will get my today's value. This is like a unitary method. Unknown upon me known. I have to calculate the indexation of 10 lakhs. So 10 lakhs was when the cost inflation index was going 220. Now today it's 370. So my cost index or index cost of acquisition would be 10 into 317 divided by 220, which is 14.40 or 41. And now I will get to my gain, which would be 30 minus 14.41, 15.59. Is this clear? Indexation part clear? Yes. So is for cost of improvement. Cost of improvement. What is cost of improvement? Cost of improvement is something when on an asset, or when specifically comes when you're talking about properties where you have actually purchased it. Now you have made any capital expenditure on it. I'm not talking about revenue expenditure. Revenue expenditures are never cost of improvement. On the capital expenditure, general pay whitewash would never be a cost of improvement, but yes, constructing a room altogether would be a cost of improvement, right? So cost of improvement also goes indexation in the same manner, but it will go only when the asset is long term. Will go into indexation in the same manner like your cost of acquisition index. So here, instead of dividing by acquisition index, you will divide it by the improvement year index. So now instead of jewelry, let's just assume that this asset which we were talking about is building, and you have constructed a room altogether. A building which was acquired in 13-14 for 10 lakhs, and you have constructed a room or improvement happened in year 2017-18 for 3 lakhs. What is the cost of index cost of improvement now? Tell me. The index cost of improvement, if I'm transferring the asset, this would always be the year of transfer, okay? The index cost of improvement has to be calculated in the year of transfer. So here it would always be year of transfer. So now you tell me, taking this table, that what would be my cost of improvement of index cost of improvement? What would be my index cost of improvement? This is 3 lakhs, not 31 lakhs, 3 lakhs. Priya answered, not, I don't want the calculation. So 3.49 or 3.50 is the correct answer. Very good, Harsh. Very good part. So now you have understood how to calculate the index cost of improvement or index cost of acquisition. Moksh, I'll definitely pass on the suggestion, and we'll try that if subtitles could be included. Vrinda, indexation will happen when there's a long-term capital asset, except in few situations. So whenever there's a long-term capital asset, you have to go for indexation. Vishwa, this classes see the assessment year applicable to you, as in for November 22 exam, is same. But yes, there would be certain amendments which would be applicable to you, which will come later. So for that, we'll have an amendment class. Otherwise, the concepts which are discussed now are very much applicable to you. Very good. Pooja, no. Why 4.32 is the answer which I've been given? Three into 317 divided by 2.272. Yes, Rohit. Abhi, for every long-term asset, you have to go for indexation. There are exceptions which we are discussing. But as a general thing, long-term assets are to be indexed. So now, I'm saying again and again, every long-term asset, indexation has to be applicable. or 3.50, both are accepted. But एक बात बताओ, in this same question, building which was acquired in 1314 for 10 lakhs and sold for 30 lakhs, you did the indexation. But tell me one thing, why? Because it is a long-term asset, it's more than 3 months, more than 36 months. But tell me one thing, instead of 1718, had I done this improvement, in year 2019-20, building I have acquired in 1314, but this improvement, instead of 1718, I just did an year before, or an year, just like an year and a half before selling. So will it with me my this 3 lakhs, will that would be indexed or not? The asset is long term. The cost of acquisition where you did indexation, but cost of improvement, in that case, will you do indexation which was done just an year before? And will that would be a question which would come in your mind? Think. The question is whether this cost of improvement, which happened just an year before selling an asset, or a year and a half year before selling an asset, whether that would be indexed, or whether that would be calculated as an index cost of improvement when the asset is a long-term capital asset. The answer is yes. The moment it's a long-term capital asset, each cost of acquisition and cost of improvement have to be indexed. It doesn't matter whether you've done a cost of improvement 3 months before or 36 months before, you have to index it. This has to be indexed. So 3 lakhs को 1920 के हिसाब से if I do indexation, 3 lakhs को 1920 के हिसाब से if I do indexation, what would be the answer? 3.29. Okay, so remember this thing, cost of improvement. Indexation means long-term capital asset, immediately do indexation. And how the indexation would happen? So if I can say indexation would be cost into CII of the year of transfer, upon which CII of year of acquisition or improvement, right? So this acquisition, what the technical terms or the income tax terms is the cost of cost inflation index of the year when the asset was first held by the SSC. When the asset was first held by the SSC, this is the term used for cost of this is the term used for CI of acquisition. The asset first held by SSC. Clear? Now, students, one thing you must have noted in this table is that this table starts only from 2001 to taking 100 as a base year, or taking 1 to as a base year. So, ma'am, what if you have purchased an asset? This is again for general thing. There are exceptions. I'm telling again and again, which we'll discuss. So, this is 2001 to. What will happen to the asset which was purchased before 2001 to say 1998 or say 1999? What will happen? So, students, a couple of years back, this cost inflation index was beginning from, which was given to us in our exam paper when I was doing C, or when I did C, was from 1963. But the point is, the government realized that it's now a high time that we shift our base year. We shift our base year to 2001 to this 63 से indexation चला जा रहा है. So it's important that we should shift our indexation to the financial year 1-2, as in just in this what is the new century, and let's shift all the cost to its fair market value to 2001-2, and then do the indexation. Ma'am, what did you just say? Simple. We said that we will take 2001-2 as a base year. इसको हम बेस ईयर मानेंगे. सो एनी एसेट परचेज्ड बिफोर 1st April 2001 का क्या करेंगे, राइट? यू हैव दिस क्वेश्चन. सो दे सेड कि उनका कॉस्ट तो वुड बी गिवन टू अस व्हेनेवर दे आर परचेज, से in year 1998 99 are they purchased. So what we'll do is asset ka we'll calculate fair market value as on 1st April 2001. We'll calculate the fair market value as on 1st April 2001. And you will say, ma'am, how will we calculate the fair market value in 2001? You don't have to worry. To you, always in the question, the cost of acquisition would be given and the fair market value as on 1st April 2001 would be given. Okay, now what you will say, ma'am, now what? Which value we have to take, whether we have to take cost or whether we have to take FMV or whether we always have to take FMV. The answer is it is as your option. It is an option of the assessee whether to take FMV or whether to take cost. Now, why you will choose so? You tell me. You are calculating capital gain, right? Cost of acquisition is a deduction for you from the net consideration. Higher the cost of acquisition, higher would be your cost of acquisition, lower would be your taxable capital gain, correct? So what cost of acquisition you would choose? FMB or cost of acquisition, whichever is higher. Obviously that you would be choosing because that would make our taxable capital gain lower. The maximum or the higher amount of cost of acquisition will obviously impact your capital gain, right? And it will be lower. So agar FMV is higher, you pick FMV. If cost is higher, you pick cost. That is at your suggestion. That is at your your option. Okay, so if in question FMV is given for 2 lakhs, cost of acquisition was 180, you will pick 2 lakhs. If FMV is 190, cost of acquisition is 250, you take 250. There is no hard and fast that you have to pick this. Now, once you have chosen between cost of acquisition and FMV, then you will apply the indexation. Then you will apply the indexation. So in this case, if I pick my FMV 2 lakh, okay. तो यहाँ पे तो मैम आपने कहा था CII of the year of transfer. Now here what you will write, CII of the year of transfer, CII of the period when I told you here CII would be the CII when the asset was first held by the assessee. No, it was 1999. But now, Baba, when you have grandfathered your cost and you have brought it to the year 2001, you've brought it to the year 2001. So यहाँ पे for the assets which are purchased before 2001, here always the CII of 1 and 2 would come, which is a base year. This would always be 100. Why always be 100? Not why year of acquisition? Because now you've brought the cost to the 2001 का value. So that's why taking cost of FMV doesn't matter. अगर आपने cost भी लिया है, now you have made a choice. You have brought it to the 2001 का value. So here the base year would be 100. So for the assets which are acquired before 1st April 2001, indexation would happen. How? First you will compare it with the cost in FMV. Whichever is higher you will take. Then you will transfer it, multiply it by the year of transfer CII, divide by CII for 2001 and 2. Since it's a base year, it would be 100. Clear? Now, a latest amendment which came, and it can come as a question, that especially for the assets which are land or building, they have added another concept that FMV as on 1st April 2001 cannot be more than stamp duty value. Cannot be more than stamp duty value. So this is only for your land or building or both. So now in question, for land or building, you would be given cost, you would be given FMV, and you would be given SDV. If cost is 100 lakhs I'm talking about, FMV is 120, and stamp duty value is 140. So then you will always compare cost and FMV, but before that you have to see whether it is more than stamp duty value or not, whether the fair market value is more than stamp duty value or not. If not, fine, compare cost and FMV. So here my index cost of acquisition ke liye I'll pick 120. But suppose this cost is 100, FMV is 130, and stamp duty value as on 1st April 2001 is 110. So my FMV cannot exceed stamp duty value. If it exceeds, then FMV would be considered as stamp duty value, and then cost or FMV, which is now the stamp duty value comparison has to be done. So here my index cost of acquisition cost, which I'll pick, would be 110. Is it clear? So stamp duty, this is not that 43 CA wala concept, 10% wala, no. That is a separate section. This is just for your land or building assets. You have to compare it. You have to compare your fair market value with SDV first, the stamp duty value, and then you have to make that what is my grandfather cost for 1st April 2001. Clear to all? Pushya Sahu, I hope your answer is given for the inflation rate. That is separate thing parts. This is stamp duty value. Those are for annual value. We use the rental amounts. And then in which case you are okay, 110 Mana. I told you to compare the cost and FMV, right? But in case of land or building or both, you have to compare FMV and SDV first. Kahi FMV is not crossing my SDV because government ka point kya? Your point is to have maximum cost of acquisition, to have the minimum amount of taxable capital gain. And government on the other hand wants to try ki kaise maximum tax which will only come when capital gain is higher, right? So they said ki fair market value ki wajah se what was happening, people were taking the fair market value at an unreasonable price, which was not even the stamp duty value at that time. So logically, my cost should not, logically, my stamp duty value should be the FMV, right? So this is what they have done. But in situations where you are claiming FMV higher than SDV, if you're claiming FMV lower than SDV, no problem. Take FMV and then compare it with the cost. So in this scenario, first I have compared my fair market value with my stamp duty value, and they have clearly said that if the fair market value crosses the stamp duty value, then fair market value would be assumed to be the stamp duty value. So now this is 110, this is the winner from these two. Now 110 by 100, whichever is higher would be my cost of acquisition, which I have picked. Is it clear? Parth, your question is clear now? Denominator for the assets which are purchased for before 1st April 2001, that would be 100. Why? Because you will take the cost inflation index of 1 and 2. See, students, there's nothing to ratify. When I have brought the cost to the value of 1 and 2, obviously I will take the CI of 1 and 2 only. Why should I take a CI of the previous year or of the preceding year? When I have the idea of taking fair market values on 1st April 2001, even if you're choosing cost, that comparison you have done consciously is to bring all your costs to the date of 1st April 2001. Now you have brought it to the 1st April 2001 to CI Baba. When the cost is of this year, then CI should also be of that year, right? So that's why it is done to take it at 100. Naveen Chandra, no. Higher of FMB or cost up to SDV, you can say is right, but technically you will write that FMB, SDV would be taken as FMB, or FMB cannot exceed as SDV when we're talking about land and building. Technically, when you will write it at that. Mansi, is it clear? Why is it only 2001 2? Where it very correctly said. Rohit very correctly said. The feedback Menon, is it clear now? Yes. Brinda, correct. But again, why? Learn the concept of why are we doing this. Do not just write FMV SDV, Papa, because the income tax says if stamp duty value says Zada, how can I give you the benefit? I am so sorry, Pooja, because the name comes different and the email ID comes different. So sorry. Chalo. So far, so good. Now we proceed ahead. We understood the concept of FMV, right? Correct. Now let's understand the cost of acquisition for certain assets. But before that, so cost indexation pay, let's discuss thoda sa. So I told you whenever there's a long-term capital asset, you have to do indexation, correct? Yes. But no indexation would happen. No indexation happens when we're talking about bonds and debentures. Bonds and debentures being a long-term capital asset, even though they are long-term capital asset, but no indexation happens. Why? Because students, debenture ka nature hai. Debenture is not getting appreciated with time, right? Debentures are sort of loans, right? If we talk about the core nature, debentures are sort of loan. They are not getting appreciated over time, correct? So as per fourth proviso of the same section 48, debentures and bonds are not the one which are getting appreciated. So hence, no indexation when we talk about an asset which is in the nature of debentures or bond. But there are two exceptions to this. It is specifically written capital gain indexed bonds. By naam mein hi indexed hai, so they would be indexed. On that, indexation would apply even if they are bonds. But they are indexed bonds, so indexation would apply. And second is sovereign gold bonds. So on sovereign gold bonds and on capital gain index bond, only on these two bonds indexation would apply. Otherwise, bonds and debentures do not get indexed. Clear? Uske baad, there is another section, another proviso which says that STT and CTT would not be allowed. STT would not be allowed while calculating the capital gain. Now, STT is what? Security transaction tax. Now, security transaction tax, kahin pe bhi you will not get deduction. So, when I talk about here, STT transfer expenses, where you will not claim the deduction. So, STT is not allowed. Is it clear? Yes. STT is not allowed. So, ma'am, didn't you say in PGBP that STT is allowed? Yes. In PGBP, when we were talking about section 36 deduction, we said security transaction tax and commodity transaction tax would be allowed when the income from sale of shares or equity shares or capital equity oriented funds is taken when you're taking that income to PGBP. That is when trading in shares is your regular business, then STT is allowed, and that too in PGBP. But when shares are my investment and I'm selling them, then STT would not be allowed. So try connecting the concept and do not overlap. Okay. Next is Now, next two things which we are going to discuss are very technical and very, very, very important. So let's proceed. Okay? Ready? Sure. Now let's talk about a very typical section. Is kind of calculation. This is a taxation section. But now let's talk about long-term capital asset of the nature shares, equity shares, or equity-oriented funds. At your level, equity shares or this is oriented, huh? Equity shares or equity-oriented funds. Equity shares listed on stock exchange, and equity-oriented funds are always listed on stock exchange. Isme, remember, the point is the STT should be paid at the time of sale and purchase both. And here the point which you have to remember is the STT should be paid on transfer. STT, security transaction tax, and which would always be paid when you are trading on recognized stock exchange. And equity oriented funds may be security transaction tax would always be paid when you are trading on stock exchange. Okay. Here the condition is, just to remember for your level, security transaction tax of equity shares should be paid at the time of purchase and transfer, and here at the time of transfer. Now these are the nature of long-term capital asset. When do these become long-term capital asset? When the period of holding is more than 12 months. Remember, equity shares listed on stock exchange other than units or securities. Correct. So now, when the period of holding is more than 12 months, isme what you have to calculate is simple sa. Whenever we are talking about these assets, number one, no indexation is allowed. I'm long term, I know, Baba, still no indexation would be allowed. Why? Because its calculation of capital gain is different. No indexation is allowed, number one. Number two, how to calculate the cost of acquisition. How to calculate the cost of acquisition. Now, clearly, students, please try to focus. For an asset which is in the nature of equity shares and equity-oriented funds, cost of acquisition has to be calculated with a separate mechanism. First, let me tell you a history of it. 4 years prior, equity shares for sale and equity-oriented funds for sale, which is traded on stock exchange, ka long-term capital gain was not taxable. 4 years ago, I'm telling you, it was not taxable at all. It was exempt under Section 1038. But 4 years back, it came as a shocker to everyone when these got taxed. So I'm talking about the budget which came in the year 2018 when the long-term capital assets on sale of equity share and equity-oriented fund got taxed. Now, on hearing this news, everyone was shocked because people used to invest in equity shares, and I'm talking about people, as a large number of people take investment in the share market for a long-term purpose to keeping in mind their various coming responsibilities, right? Many of you may know your parents or grandparents who had invested for a long-term purpose in equity market. So it came as a shock, Baba, because they used to invest thinking that whenever we'll be selling it, even after 4 years, 5 years, this to gain aega, and that would never be taxable, right? That would never be taxable. This is what the mindset was. This is what the mindset was. But when all together again come up, suppose karo kisi ne 20 years they have made an investment, all together now it would be taxable. That comes as a shocker, na? Because you made an investment thinking it's an exempt part, or you made an investment thinking it's an exempt part, but now it's a it is altogether getting taxable, and in 20 years the market has gone from somewhere to somewhere else, right? So the government said, okay, we are giving you the shock of making it taxable, and since we are giving you a shock on 1st Feb 2018, what we'll do is your cost, we'll bring that cost to the date here, which is 31st January 2018. We'll not tax any of the gain which has happened till here. We'll bring your cost up to this point, taking the fair market value as on 31st January 2018. So whenever the question comes about equity shares or equity oriented fund, you have, and those shares or equity oriented funds have been purchased or acquired before 1st January, before 1st February 2018, before 1st February 2018, what you will do is you will compare the actual cost and the FMV, which would be given to you in question as on 31st Jan 2018. Again, I'm saying only for these assets acquired before 1st Feb 2018. Okay, you will compare it, and whichever is higher, you will take that. Whichever is higher, you will take that. Ab kya hua? Immediately when I'll be selling any equity shares after this date, I will get this as my cost of reduction, right? This as my cost of acquisition, and this would be reduced. That means, if I brought anything, say 10 years back, now that has been brought to today's value, and that is being given to me as a deduction. Clear? So you brought your cost on FMP. The reason behind doing that is also clear, right? Any doubt up till now? Capital index bonds and sovereign bonds indexation. But at the same time, here it is not stopped. A bit technical. Once you are purchasing the cost in FMV, whatever is the thing, there is one thing which the government says, that before you do this, before you compare the higher of this, compare one more thing. That is the FMV and the sale price. Sale price. FMV and the sale price, or the sale consideration, or if I use the term which I just told before at the beginning of the class, full value of consideration of this asset. And why are we doing this? See, had I have to just told you, I would have just told you compare this and then compare this with this. But let me explain you the reason behind it. The reason behind it, student, is the government is saying that take the higher of the cost or FMV. Okay. But before that, compare it with the actual sale consideration. Why? Because we do not want you to claim unnecessary loss. We do not want you to claim unnecessary loss because of this grandfathering mechanism. The bringing the cost to a particular year is called grandfathering the cost to the particular year. So because of this grandfathering mechanism, we do not want you to claim unnecessary loss. Ma'am, can you explain? Yes. Let's take this as a situation. Sale consideration. Everyone on the screen, the moment you understand this example, you do not have to ratify anything, and this is my best attempt to make you do that. Now, the cost of acquisition is 100. Fair market value as on 31st January 2018 is 150. The sale price is 200. You will bring, since this is an equity share, you will grandfather your cost. So you will say, I'll compare it with 100 and 150. I'll take 150 as my deemed cost of acquisition. And then I will compare it with 250 would be my capital gain. Correct? 200 minus 150 would be my capital gain. Right? This is what you will say. Fine. Another example लेते हैं. Cost of acquisition is 120. Fair market value कुछ ऐसा equity share था which started falling as on 31st January 2018 is 80. Sale consideration is 200. Sale consideration is 200. 120 and 18 में I will compare. I will pick 120. So 120 and 200 में I got 80 as my capital gain, long-term capital gain. Now, next. Now is the typical situation. You just blindly compare fair market value and the cost of acquisition, fair market value and the cost of acquisition, you will say, ma'am, 150 is my fair market value as on 31st January 2018. Now I will reduce it from my sale consideration and you will say, and this is 20 ka capital loss. Now 20 ka capital loss means you will get the benefit of this loss in the future gains. So this situation को control करने के लिए, because even if this fair market value का concept would have not come, this fair market value का concept would have not come, and you are selling the asset. There would have been a gain or there would have been a loss. There would have been a gain. 100 ka asset, you are selling it at 130, there would have been a gain. Forget this part, right? 30 ka, there would have been a gain. But just because you're taking the fair market value, a beach make mechanism they introduced, just because by claiming that fair market value, which was just introduced to reduce that shock surprise impact which came from taxing and exempt income, now taxing it all together, just because taking that fair market value, you are suffering a loss. But prima facie, if I see over the top, there is no loss. 100 ka asset has been sold for 130. There is no loss. Just because of taking this fair market value, it is coming at loss. To avoid this situation, government said, first compare the fair market value with the sale consideration. First compare the fair market value with the sale consideration. Whichever is lower, take that. And then compare it with the cost of acquisition. Whichever is higher, pick that, and that would be your deemed cost of acquisition for equity shares or units which are acquired before 1st Feb 2018. There is no indexation applicable here, but the concept of FMV as on 31st January 2018, which has to be considered. And I hope the logic for it is also clear, that why are we comparing with the sale consideration. So whenever you're doing such things, there would be two results. Either there would be gain or there would be no loss, no gain, and it would be zero. Because the moment you're picking fair market value and sale consideration may say lower, and that you're comparing with the cost of acquisition in this situation, and your deemed cost of acquisition is actually sale consideration. So sale consideration minus sale consideration would always be zero. Right? This you have to do when you are talking about an asset acquired before 1st February 2018, before 1st Feb 2018. Ma'am, what about asset acquired after 1st Feb 2018? Baba, simple. Sale minus purchase price. Simple. No indexation. No indexation. Because uska taxability is discussed here. Well, we'll do taxation of capital gain. We'll discuss that. Stamp duty value, see, Surya, technically you have to understand stamp duty value is a concept linked to buildings. Registry cost value is called stamp duty value. When we're talking about immovable property, then only stamp duty value, the concept is there. When we're talking about movable properties, fair market value is the term which you use. Kanish, I did not get your point here. Oh, Priya, your query is solved. Capital gain index bond and sovereign gold bonds for indexation is allowed. In general, bonds and debentures for indexation is not allowed, but capital gain bond and sovereign gold bonds are the two things on which indexation is allowed. Shambhavi, I just told you the significance of first of 2018, that because from that budget itself, this thing got taxable. That's why, and that budget was presented on 1st Feb 2018. That's why, to absorb all the shocking before immediate date, the cost were grandfathered. Okay, so everyone, for the third situation, एक बारी try to understand it. Technically try to understand it. First case you got clear, 50 ka gain and 80 ka gain. Now tell me, if I would have compared 100 and 1 cost of acquisition and FMV as on 31st January 2018, I would have picked 150 being higher as my beam cost of acquisition, right? And then I would have reduced it from my sale consideration 130 and I would have got 20 ka loss. I would have got 20 ka loss. But does I have do I actually have suffered a loss? Just think, cost of acquisition was 100 and the sale price is 130. In real, have I suffered the loss? The answer is no, right? So just because of taking the benefit which was given of FMV as of 31st January 2018, I am suffering a loss. And this benefit was given why? Just to absorb all the shocking element which as a person you received of investing in an asset a way before time, thinking it's a non-taxable asset. So just to bring everything to the present scenario, they gave you the benefit of this. But iski wajah se unnecessary, I cannot claim the loss when in actual I'm having the gain, right? So that's why they said that it is always for an equity shares or equity oriented funds which you have brought before 31st January 2018 through stock exchange, compare the FMV and sale consideration first. Whichever is higher, take that. Whichever is lower, take that, and then compare it with the actual cost of acquisition, and whichever is higher, that would be your deemed cost of acquisition. And from that, you will calculate your capital gain, right? So my actual cost of acquisition and सबको compare करके, first I compare this 130 comes, then 130 and 100 में 130 is my deemed cost of acquisition. Now I calculate the gain, 130 sale consideration minus 130, 0. Clear? Yes, Namrita, if the asset is acquired in 2017 and improvement is done in 2019, indexation for both have to be done. इसका example also we took. Short term के लिए नहीं है, this is only for long term. Short term के लिए तो simple cost minus sale minus cost. Very good. So I hope everyone understood this. These are the two very technical concepts when we talk about cost of acquisition, right? The one which is a general concept of taxing of bringing all your cost for the asset acquired before 1st April 2001 to the FMV as on 1st April 2001, and which one you will take depending upon your option. Acha, isme student, no one asked me, now what about cost of improvement before 1st April 2001? What about the cost of improvement which was done before 1st April 2001? So, I told you, back to the concept one, I told you cost of acquisition which you have to take is your cost or FMV as on 1st April 2001. Whichever is there, then you index it. What about improvements which happened before 1st April 2001? The answer is when you are taking FMV as on 1st April 2001, or when you're actually comparing it, the improvements would always be included in this FMV. The fair market value of an asset would be in for an asset as a whole. So any improvements which has happened before 1st April 2001 are not to be considered, because that are automatically considered in this fair market value. Improvements after 1st April 2001 only have to be taken. So any improvement which has happened before 1st April 2001, do not scratch your head there. It has to be clearly ignored, and the answer lies here, because whenever you're picking a fair market value, you're picking a fair market value of the whole asset. Ma'am, what if we choose cost because this is higher? So what, Baba? You were given an option to compare it with the fair market value of the whole asset or the cost, and you picked cost. Fine. Now, do the calculation. Improvements before 1st April 2001 are to be ignored. Clear? Chalo. Great. Now we proceed to another concept, which is a concept of previous owners. I'm doing, students, 3-4 sections in line: section 49, section 49, section 48, section 55, section 56. All of these are done together. Sorry, not 56, 55. Okay. Cost to previous owner deemed as cost of acquisition of an asset. Now, students, there are certain scenarios which are given to you where you are not actually purchasing an asset. Think yourself as the person who has an asset and who has received this asset as a gift or as a will or as succession or inheritance or devolution, or you have received this asset on distribution on asset on liquidation of a company, or you have received it as an asset from your trust, or you're a holding company, 100% holding, you're a holding company and you're holding on subsidiary Indian company has transferred your asset, or a vice versa situation. So कहने का मतलब है, in all the situation you have received an asset, for which you did not pay off. You are Mr. A. Your father, Mr. B, had transferred you an asset through gift. Okay. Clearly, please focus on understanding this. Has transferred you an asset by a gift. Now, tell me one thing. Mr. B has given you an asset, who is his father, by gift. For you, is there any cost of acquisition? Did you pay anything? No. Now, when you're selling this asset in the year 2021-22 to Mr. J. Mr. J से आपको full value of consideration मिला, say 50 lakhs. But for you, there is no cost of acquisition. Will you be paying capital gain on this full 50 lakhs? Let's see. उससे पहले, let's go back to step 1. When Mr. B, your father, transferred this asset to you, what would have happened? Mr. B has transferred an asset to Mr. A, who is his son. Is it a capital asset? Yes. Was it a transfer? Yes. Why? Because ownership was getting changed, right? Ownership was getting changed. There was an extinguishment of right on the asset of Mr. B now, and that right was given to Mr. A. Correct? This is a transfer. So, ma'am, Mr. B, when transferred to Mr. A, so us time pay, we know the cost of acquisition, what he had purchased for, right? But did Mr. B got any consideration from Mr. A? Obviously not, because it's a gift. So there was missing full value of consideration. So what income tax did in those scenarios which we discussed, succession, will, transfer between subsidiary, wholly owned subsidiary and holding company, they exempted it from the transfer of this person. The person giving gift to another person, even if that is a transfer, that would not be considered transfer for the purpose of capital gain. That would not be considered a transfer for the purpose of capital gain. Section 47, which we'll discuss tomorrow, usme you will see that. So iske haath se problem he solved, because for him now it's not a transfer to be taxed as capital gain. Clear? Now let's come into the hand of Mr. A. Mr. B ke haath se now the point has been clear because government accepted it. Now for Mr. A, full value of consideration we have because he sold it to Mr. J for 50 lakhs. Now what about the cost of acquisition? So the government says in such scenario, or the income tax department says in such a scenario, the cost of acquisition in the hand of the SSC would be the cost to the previous owner. And who is the previous owner? The person who has actually paid the price for that asset. That is the previous owner. So if Mr. B also got it from a gift from his father, Mr. C, then the previous owner would be Mr. C. The person who has actually paid the price of that asset, or the actually purchased it from any other mode not exempt under section 47, that person is called the previous owner. Okay, so cost of the asset would be the cost of the previous owner. And similarly, just like we discussed, once the cost of the previous owner is clear, you will follow the same concept of comparing it with the FMV if it is purchased by the previous owner before 1st April 2001, purchased by the previous owner before 1st April 2001. If indexation would apply accordingly. Indexation would apply accordingly means the holding period. What is the nature of capital assets? So the holding period, the period of holding in such situation to consider, to see whether it's a capital asset of long-term or short-term nature, the period of holding would be considered from the period the previous owner held the asset to the period the assessee has transferred the asset. So if the assessee transferred the asset on 31st January 2022, and he received this asset on, say, as gift on 4th April 2019, and let's ignore Mr. C abhi, huh? And Mr. B had purchased this asset on 6th June 2014. So the period of holding for that particular asset would be considered from the time the previous owner held the asset. Because yahan pe to students, the capital gain was not taxed, so you have to go yourself back to the period from which the actual the previous owner had purchased it. So 6th June 2014 se leke 31st January 22, obviously more than 6 months. Let's assume it's let's assume obviously more than 2 years. Let's assume it's a building. That means it's a long-term capital asset. So the cost is clear. Cost of acquisition is to be considered as to the cost of the previous owner. Number one. Number two, period of holding would be the period from which the previous owner held the asset till the time the asset is sold. So long term, short term also clear. Right? Now, indexation. How will the indexation happen? How will the indexation happen? You have taken cost to previous owner as my cost. You are Mr. A. Here, the CIR of the year of transfer would come. Here, CII, I told you, technically we use the term as it is written in the income tax, CII of the year when the asset was first held by assessee. Cost to previous owner. Now, in this case, cost to previous owner, so suppose Mr. B had purchased this building for 20 lakhs. So cost to previous owner for you is 20. Lakhs, right? CII of the year of transfer would be the CII, which is 21, 22 ka 317. CII of the asset first held by the assessee. This is what your section 48 says. So you will say the CII of the year 1920 should have picked, right? But isn't it absurd? Thoda sa, isn't it unreasonable to you? Ma'am, you're saying cost previous owner ka lo, period of holding, compare it from the date when started from the date or recorded from the date when the previous owner purchased the asset to the date the assessee has transferred the asset. Okay, you're telling me that. Yeah, I'm telling you that. And but why are we picking the CI of 1920? But this is what our income tax says. The income tax prima facie plain reading thing, it has written this. But Bombay High Court ka there is a judgment. Bombay High Court ka there is a judgment in the case of Manjula J. Shah. Please remember this name. This is only one person name which you have remember when I talk about case law. Manjula J. Shah, in which Bombay High Court says that no, CII also we will take of the year, CII also we will take of the year when the previous owner purchased the asset. When the previous owner purchased the asset, we are not unnecessarily burdening it, because when you're taking the period of holding from that year, you're taking the cost of the previous owner also. The CII of the year when the previous owner first held the asset should be taken. This is given to you as a case law on page 4.37. You can read it as a homework. So the CII of the previous owner or the CII of the year when the previous owner first held the asset would be taken. So ma'am, hum paper mein kya kare? You can pick 1920. You can pick CII of the previous, as in you can pick the CII of the year in which the asset was first held by the assessee, or you can pick the CII of the year in which the asset was held by the previous owner at first. Both would be correct, but when you're taking this previous owner wala CII, always give in your question, because technically this is right. Always give it in your question that we are taking the CII of the previous owner or CII of the year when the asset was first held by the previous owner, and hence we are following Manjula J. Shah. Okay, as decided by the Bombay High Court. Clear? Is it clear? So let's summarize it. Whenever you assessee, think yourself as an assessee, have received any asset as a gift, will, through inheritance, and basically you have not paid the price for the asset and it has just come to you. And in those scenarios, the transfer, when it is coming to you, is not taxable in the hand of the transferor as per section 47. Okay, we'll discuss that. So Mr. B is all released from his liability. Now for you, it would be taxable when you will sell it, when you will sell that asset. So when I'm selling that asset, it would be taxable. Full value of consideration would be the sale consideration. The cost of acquisition would be the price which is paid by the previous owner. The previous owner is the person who actually has purchased that price. Mr. B, whatever the cost which Mr. B has purchased would be the cost of acquisition. The period of holding has to be decided from the period when Mr. B held the asset till the date of transfer. Till the date of transfer. The CII has to be taken for the year, CII of the year of transfer divided by CII of the year when the asset was first held by the previous owner, not the assessee, if you're following Manjulatisha. Ma'am, what about the assets which are purchased before 1st April 2001? See, concept is same, only the cost of the previous owner, only the cost of asset ka definition or the cost of acquisition ka definition has changed. So you are picking cost of the previous owner. So if the cost, if the previous owner has purchased the asset before 1st April 2001, before 1st April 2001, compare it with the cost of the previous owner and FMV on the date of 1st April 2001. Whichever is higher, you will take that. Whichever is higher, you will take that. It's may only one thing has changed, which is this. The other comparison goes in line. The other comparison goes in line. And if you're picking first, if the asset is purchased before 1st April 2001, then obviously this would, the base numerator would be 100, because once you're comparing it, it would be 100. Now, what about cost of improvements? Cost of improvements, if done by the previous owner before 1st April 2001, that would obviously be considered in the comparison which you are doing. Cost of improvement done by previous owner after 1st April 2001 also have to be considered. Cost of improvement done by Mr. A. Mr. A. Cost of improvement done by Mr. A would also be considered if done after 1st April 2001. Take a moment and tell me if there's any query. I'm going step by step so that you people, if there is any query, can relate it. But again, do not try to ratify it. Just try to solve it. It is on page 4.4.377. Students, there is another proviso, first proviso to section 48 and fifth proviso, which is in relation to foreign asset or a non-resident. That I'll explain once we are done with all of it. I've made a note of it, but that would be done later. Vrinda, CII of the year of transfer is when you are actually selling it for the price, actually selling it for the, for some, when you're actually selling it for some transfer. Because यहाँ पे तो I just told you कि कहानी खत्म हो गया, because income tax said that when you're gifting someone an asset, it is not a taxable transfer. It is a transfer, but not a taxable transfer. Okay. Next, cost of acquisition. हम एक चीज से बोलते करें yes. Cost of acquisition students intangible assets में when we're talking about goodwill of business or profession, पहले business profession का goodwill was not considered here. So goodwill of business or profession, trademark, brand name, etc., route permits, all of this का कैसे how you have to take it. So when you're talking about goodwill, if it is self-generated, that is, if you yourself have generated that goodwill and now you're selling your business or you're selling that goodwill, uska cost of acquisition would be nil. But if you have purchased that goodwill from someone, then the purchase price which has given to you, if you have received that goodwill under will or gift, then obviously cost to the previous owner. Clear? But each students which I told, now let's just correlate the concept of goodwill with depreciation. Remember, goodwill I told you when we were doing depreciation that goodwill is not considered as an intangible asset. It's been no depreciation is allowed. Correct. But that was not a scenario until a year before. Depreciation is not allowed on goodwill. Goodwill amendment came, listen carefully. In Finance Act 21, and it said that goodwill is no more a depreciable asset. But people would have, usse pehle it was depreciable asset. So, people were depreciating goodwill. So suppose I purchased a goodwill 5 years back, uska cost of acquisition I was depreciating it. Okay, but goodwill altogether became a new asset for depreciation. This came in Finance Act 2020. Finance Act 21 se this amendment came. So this budget comes on 1st February 21. But what will happen? This amendment came retrospectively from the previous year 2021. They said that क्योंकि अभी books were not closed for 2021, right? First Feb books were still open for 2021. They said whatever depreciation you have charged up till 31st March 2020, whatever depreciation you have charged up till 31st March 2020, consider the WDV after the depreciation. Okay, consider the WDV after depreciation. But 2021 से goodwill would not be an asset. So reduce whatever the WDV was there of goodwill under transfer. So ultimately my goodwill in the books is now 0. Simple sa logic hai. Whatever WDV was there of the goodwill, whatever depreciation you would have charged on goodwill, usko whatever the WDV is coming as on the beginning of 19, that is as on 1st April 2019, reduce it from the transfer and bring your goodwill as 0. Simple. This is what when goodwill was no more taxed as an asset. So this came as a retrospective amendment. Ab kya hoga 2021 mein, when I'm closing the book as on 2021, I have goodwill. मेरे पास opening value तो था. Sorry, not 1st April 2019. I had an opening value as on 1st April 2020. I reduced that from the WDV and I got it. My goodwill became 0 in the books of accounts. So for any goodwill which was acquired before, which was there as an asset, in the books of accounts, uska value kya hoga? Cost of acquisition would have been 0. Cleared? So cost of acquisition for goodwill or for any intangible asset, if self-generated, nil. If purchased from someone, then the purchase price. If received as a gift, then cost to previous owner. But just remember this concept. Next concept, students, before we take break, is bonus shares. Cost of acquisition of bonus shares. What is bonus shares? Bonus shares are the shares which you receive without paying any further price to it. You were already an equity shareholder, so you did not pay any price to that share and you have received it. So basically you do not pay any price to it. So any bonus shares, अब इसमें ना 3 parts बन जाएंगे because 3 typical dates which we have discussed. Any bonus shares acquired after 1st April 2001 का value would be nil. Bonus shares which were received before 1st April 2001 का value would be FMV as on 1st April 2001 because cost तो कुछ है नहीं, so cost and FMV में compare करोगे, so whatever the fair market value as on 1st April 2001 is what you have to take. So any bonus shares का cost of acquisition after 1st April 2001 nil, before 1st April 2001 the FMV as on 1st April 2001 because cost and FMV में compare 0 and FMV में compare करोगे तो obviously FMV would be the answer, correct? What about bonus shares which are traded on stock exchange, basically on which you will be paying STT at the time of transfer? What about those bonus shares? Usme you will apply the same concept, student. You will apply the same concept, actual cost or FMV as on 31st Jan. इसको कंपेयर करने से पहले compare it with the sale consideration. So whichever is lower, pick that and then compare it with the actual cost, whichever is higher, pick that, right? So here actual cost क्या होगा? Bonus shares if before 1st April 2001 तो actual cost automatically FMV of 1st April 2001 आ जाएगा. And अगर after 1st April 2001 है तो that would have been nil. So क्या हो रहा है? Listen carefully. Write it down. मतलब write it down whenever you're getting confused. Write it. What you have to do for bonus shares which are traded on stock exchange and which are sold at stock exchange, उसमें क्या होगा? Simple सा concept है, मैम shares equity shares है. What the special FMV वाला rate section would apply, correct? So actual cost and FMV as on 31st January 2018 को you will compare, but before that you will compare from the sale consideration which we just discussed, correct? But here actual cost क्या होगा? Again you have to refer to this, would be nil when we are talking about bonuses allotted after 1st April 2001, but would be FMV when we are talking about FMV of 1st April 2001 when we are talking about the bonuses allotted before 1st April 2001. Then obviously the comparison will go. So do not confuse, break up the point into one by one and you will get the answer. Siddharth, goodwill is no more an intangible asset, but I'm talking about when it would have been an intangible asset. Correct. Very good, Rupesh. So clear ho gaya? Now I will give you 5 minutes of break. We'll come back by 8:30, 8:32 and we'll start with the right shares. Only I think usi ka cost of acquisition has left, and then we'll discuss few more important points. Make us what comparison steps you write it, Priya. If there is any query, I'm there to assist. You will get small notes on that also. But your let us recap. Revise wala part is itself a very good resource, to be very honest. Copyright, if acquired, obviously the purchase price would be the cost of acquisition. Jay Gandhi, what did the income tax department said कि भाई अब किसी asset को you do not have to treat no more an asset. So goodwill के case में, even if it was a depreciable asset, it was going, suppose a goodwill is being depreciated at the rate of 25% for first 5 years. But what you have to do it 2021 में आके reduce whatever the WDV of that asset and from transfer by considering it as a transfer, so that your goodwill in books now becomes zero. That's it. Simply they just told you to do it that in 2021, so that now when you are in 1st April 2021, there is no goodwill in the books. What, Ria, what kind of steps you're looking forward for? So on bonus shares wala part, bonus shares are the shares which are given free of cost, right? So most of the cases में the price you have not paid, correct? So 1st April 2001 से पहले any bonus shares which are allotted to you, 1st of April 2001 के बाद any bonus shares which are allotted to you, the cost of acquisition would be nil because you have not paid any price for it. But 1st April 2001 से पहले the cost of acquisition would be the fair market value. Why? Because cost of acquisition is nil, and FMV as on 1st April 2001, whichever is higher you take, obviously FMV would be the higher. Nil, zero में से किसी को compare करोगे, FMV would be the higher, you take that. But for the bonus shares which are transferred on a stock exchange, remember we do this, we compare it with the fair market value of 31st January 2018. But before that, we compare it with the sale consideration. Sale consideration and FMV में whichever is higher, you take whichever is lower, you take that, and FMV में actual cost में whichever is higher, you take that. But here actual cost would be obviously the same which we have picked here. So actual cost and then FM. So for a bonus share which has been allotted before 1st April 2001, the final comparison would have been between FMV as on 1st April 2001 and FMV as on 31st January 2018. Clear, Jay? Allotted on 1st April, May nil. The bonus shares received before 1st April 2001 Sunil Dubey is your FMV as on 1st April 2001. Nothing to ratify, Baba. Cost and FMV may you compare na as on 1st April 2001. Cost is always nil. First, FMV would be the answer for the bonus shares which are before 1st April 2001. Any STT always happen on any equity which is on stock exchange. Vrinda, FMV and sale consideration always has to be compared when we are talking about listed equity shares or listed equity oriented funds. The reason was that, which I explained, that why are we doing it? Because you have to make sure that just because of taking the fair market value, there is no loss coming. That's why you always compare it with the sale consideration first, and then you compare it with the actual cost. Any cost of improvement happening after 1st April 2001, whether done by previous owner or whether done by you as an assessee, have to be considered. So we'll be back after 5-10 minutes and then we'll proceed ahead. Okay. Thank you. Okay, so welcome back. One example was the demand for bonus shares. So let's understand. I will simply do the bonus shares. I am selling the shares at 100 per share the price. Okay. My full value of consideration is 100. Simple सा share था which was allotted to me on 1st April 2001. Okay. Obviously, I did not pay anything. The cost of acquisition would be nil. Indexation, there is no point because zero for what would I index? So whatever is the full value of consideration, that would be my capital gain, correct? For a share which was allotted to me before 1st April 2001, this case, full value of consideration is 100. Cost is nil, but FMV, which is there as on 1st April 2001, is 30. So my cost of acquisition, mean cost of acquisition would be 30. Indexation would be applied, yes, if it's an unlisted equity shares. Unlisted security share है, उसका bonus shares है, yes, indexation would apply. ठीक है? Now we come to how will indexation would be applied? 30 into 317 upon 100. Now we come to this situation. Everyone's favorite situation. Cost of acquisition तो नहीं होगा. FMV as on 31st Jan 2018 is 80. Sale consideration is 100. For an asset which is acquired on foreign bonus shares allotted after 1st April 2001, what would be my deemed cost of acquisition? Comparing it with the FMV and sale price, lower FMV and the cost of acquisition, which is FMV and the actual cost, which is this nil. So nil and 80, may deemed cost of acquisition would be 80. इसको स्टूडेंट्स अगर आप स्टेप्स की तरह याद करोगे ना, फर्स्ट आई हैव टू डू दिस, देन आई हैव टू डू दिस, then there is a problem that you will forget it. But इसको if you will understand the concept about it ना, कि why are we doing it? One second. I think the screen was not shared. Sorry. पापा मिल गया, पता चला. I'll repeat again quickly. Yeah. Actual cost for an actual cost for actual bonus shares for allotted after 1st April 2001. Actual cost would be nil. Full value of consideration is 100 per share. So my capital gain would be 100. Okay. Bonus shares allotted before 1st April 2001. Full value of consideration is 100. FMB as on 1st April 2001 was 30. So 30 and cost of acquisition, actual cost is nil. So 30 and nil mein 30 is my deemed cost of acquisition. Now 30 ko, if it's an unlisted equity share, I will index it 30 into 317, which is CI of the year of transfer, which is the current year, upon with CI of the base year, which is 100. Now FMV, let's do it. Bonus shares are the listed bonus shares. Okay. FMV as on 31st January 2018, 80. Sale consideration is 100. FMV and sale, if I make a comparison, obviously first I have to do that. 80 is coming. Now FMV and cost, I have to make a comparison. So if this share, bonus shares which we're talking about are allotted before 1st April 2001, so FMV and cost of acquisition would be this, which is nil. So nil and FMV, whichever is higher. So my deemed cost of acquisition would be 80. Now, for an asset which is allotted before 1st April, for the bonus shares allotted before 1st April 2001, the cost of acquisition would be FMV as on 1st April 2001, or the cost, whichever is higher, which is obviously 1st April 2001 wala cost would be taken. So 1st April 2001 wala FMV and 31st January 2018 wala FMV, whichever is higher, would be my deemed cost of acquisition again, which would be 80 in this scenario. Again, student, I was saying that please do not remember it as a rectification. Remember that you have to calculate actual cost, right? Actual cost of actual cost आपको लेना है, cost of acquisition लेना है, cost of acquisition लेना है. Just think about it. But remember, I have to see two periods. One is I have to see the period of 1st April 2001, because everything in my capital gain is starting from 1st April 2001. Before that, I have to come, if anything is before that, I have to come to 1st April 2001. And that would obviously with comparison. And if you're talking about an listed equity shares, listed equity oriented funds, then I have to think about 31st January 2018 also. Sunil, what did you did not get for the shares allotted on or before 1st April 2001? Bonus shares hai. Submit, they've applied it. Bonus shares hai, ठीक है. Submit, they have applied the concept of comparison. Be it any asset, ठीक है. On every asset, they've applied the concept of comparison before 1st April 2001 वाले पे. So why would you not do for the bonus shares? Which shares for indexation are applied, Namrata? When there is an unlisted equity share. Because listed equity shares mein to we do not apply the concept. So, to simply summarize it, for any asset which we're talking about, cost of acquisition would be the price which you have paid, right? But if you have not paid the price and you received it in gift, cost of acquisition, the price with the previous owner has paid. But in both the scenarios, you have to see whether it was, if you're talking about, if you have purchased the price, then you have to see whether the asset was acquired before 1st April 2001 or not. Why so we are taking 1st April 2001 or not? Because all the inflation index are now taken as base year for 1st April 2001. For year 2001 and 2. So 1st April 2001 said anything is there before, bring all of that to the value of 1st April 2001. Okay, simple, clear. For listed equity shares or listed equity oriented funds, they were not taxed earlier, but from the budget 2018, the impact of getting taxed came in. So that's why all the costs were grandfathered to 31st January 2018. So they, whatever they were the costs that were compared with the fair market value on 31st January 2018, and that was considered as deemed cost of acquisition, provided the fair market value was not more than the sale price. Okay. Then there was the concept of previous owner, which we were discussing. Previous owner के case में, the cost, whenever you're receiving any asset as a gift, free will, and all other things which are given in section 49, the cost of the previous owner is the cost of acquisition. When you take the cost of the previous owner, then the same concept as your cost of acquisition, then same concept applies. Of 1st April 2001 also, of 31st January 2018 also. The moment you first freeze your cost of acquisition, then you see whether I have to compare it with the FMV or not. Any cost of acquisition, when we're talking about any cost of improvement which has happened before 1st April 2001, would not be covered. Why? Because that is always included in my FMV as on 1st April 2001. So any, whether by previous owner or you, would not be considered. Any cost of improvement after 1st April 2001 from previous owner or by you would be considered. By you or the previous owner would be considered. Whenever you're talking about previous owner, the period of holding has to start from the date the previous owner purchased the asset to the date you are transferring. And basis that, the nature of long-term and short-term happen. It may happen that you have got the asset just 2 days before and now you are selling it. Then also the period of holding would be seen from the date when the previous owner held the asset, and indexation would also happen accordingly. CI of the year of transfer by CI of the year when the asset was first held by the assessee in general case, or first held by the previous owner, provided you're taking the case of Manjula Disha. Now we come to bonus shares. Bonus shares is simple, hai baba, you do not give any price for it. So if you're not giving any price of it, the cost of acquisition would be nil. But ma'am, 1st April 2001 wali case mein kya hoga? Obviously, compare it, simple, do not ratify it, compare it with the cost of acquisition and FMV, right? Cost of acquisition is nil. So in all the scenarios, FMV as on 1st April 2001 would be your cost of acquisition, right? So that is what has done. But when we are talking about listed bonus shares, or the bonus shares on which you have said you have paid the STT, then obviously the same funder would come, compare the actual cost with the FMV. But before that, compare it with the sale price. Actual cost in FMV may, again, actual cost would be the same thing, which was either this or this. Simple. This is the summary up till now. I hope now there has been a clarity. Again, students, first time concepts hai. There is technical, and today's class is technical. In fact, the coming class also would be technical. But one thing, if you will try understanding and putting yourself of having that asset and knowing the concept behind that asset, then rectification would not be there. Rupesh, actually, less cost of indexation, I did not get. Ria was the FMV as on 1st April 2001. Chalo. So now the concepts, I hope, are clear. Now, एक और technical चीज पे let's understand. There is at your level, it may or may not come, but since we have a scope of MCQs, anything can come. राइट शेयर्स, ध्यान से समझना ये कॉन्सेप्ट, एक ही बारे में अगर सब everyone would be on the screen without looking here where everyone would understand it, but just focus. राइट शेयर्स क्या होते हैं स्टूडेंट्स? राइट शेयर्स क्या होता है? बिफोर गोइंग टू द market, as in the company, before going to outsiders to take the money, they offer you certain shares, the certain share at a price which is attractive, so that you yourself can buy. Because market में जाने के लिए there are lots of compliances and due diligence which has to be taken care of. So what the company do, the share, there are equity holders, we have the right before, so they issue them the right shares. Obviously, they are issuing them the right shares. So suppose the price it of 100, they issue you at, they say कि अगर आप लोगे तो you can take it at 90. You can take it at 90. But It is on you whether to take it or not. Maybe Baba, you do not have money to invest right now, or you are investing in thinking of investing in somewhere else. So right, it may be on you, but hoga kya कि 100 का share is now being offered to you at 90. Suppose. Okay, this is your right. You choose to acquire it. You choose to acquire it. That means you choose to exercise the option. You choose to exercise your right. So for you, the cost of acquisition for these shares would be the cost of acquisition for the share would be the cost at which you have purchased, the amount which you have actually paid for acquiring the right shares, which would be 90. So amount actually paid for right shares, right? So this is 90 in this case. Samajh aaya? These are what I'm talking about, the new shares. The original share just which you have purchased at a price, that would be the cost of acquisition. Suppose before that also you were holding 1000 shares at rupees 50 each. So that is your cost of acquisition. That is immaterial when we're talking about right shares. Right shares mean fresh shares are being issued at an attractive price because you have a right on those shares before anyone else. This is what the right shares means. Okay, not left, right, but a right on that shares. Clear? Samajh aaya? Okay. So this is when you actually exercise the option. So you have subscribed to the shares. Exercise the option, or I say exercise your right. But it may happen that you may not choose to exercise the right or exercise your entitlement. Correct? Simple. ठीक है, नहीं किया. But now you are smart. You know कि I can go to X person and give my right. I have a right. I have an entitlement to right. So I give up my right in the favor of some X person. You are Mr. Z. You have re-announced your right in favor of Mr. X. अब ध्यान से सुनना. यहाँ पे people get confused. I had a right. I did not have shares. This is an option when I exercised my right. But I do not want to exercise, but I want to fetch an opportunity. I went to Mr. X and Mr. X ko I lured that, do you know I have a right? Okay, so 100 ka share na. What I'll do is I'll give you for, company is giving for 90, okay? But I'm giving, and this is exclusively my right. I will give you this right at 5 per share. I am not giving him the share. I am giving him the right. What is my capital assets? My capital asset is this right. The capital asset in question is this right, not the shares. And it is a transfer, because remember transfer ka definition mein there was extinguishment of right. When there's an extinguishment of right, that is a transfer. So I'm giving up my right to Mr. X. और उस right के बदले what I'm taking the 5 per share. उस right के बदले what I'm taking rupees 5 per share. I am not giving him the shares. I am giving him my right. And उस right के बदले what I'm taking rupees 5 per share. So for me, I am Mr. Z. For me, the full value of consideration which I have received is 5 per share, right? Correct. So suppose I had a right for 100 shares. So 5 per share, I have this full value of consideration which I have received. But what is the cost of acquisition is what is interesting, right? The cost of acquisition for these rights is nil, because I did not purchase or did not pay anything. I did not pay anything to get that right. By virtue of my allotment before, I had this right, but in real, did I pay anything to get right? No. The right which I have transferred in someone else's name, I have not transferred the share, I have transferred the right. So for that, I have received paisa, I have received the paisa. That is a transfer taxable because it is coming in the definition of transfer. The money which I have received for giving up the right is this, but the cost of acquisition is nil. So 5 per share minus cost of acquisition. This would come as 500 as my capital gain. Simple. अब ये भी clear हो गया मैम, fine. But now think yourself as Mr. X. Let's change the narrative and think yourself as Mr. X. Now Mr. X को क्या कॉस्ट पड़ा उस शेयर्स का? Mr. X को 1 तो he give 5 rupees for that right, plus he would be giving 90 to the company because share ka price is 90 which the company is allotting at. The right share ka price is 90. The right share ka price is 90 which the company is allotting at. But for me, I am Mr. X. वो 90 मुझे कैसे मिला when I only paid 5 rupees for that, right? So for me, the total cost of share is, which I have received as an asset. The asset in my hand is now not the right. The asset in my hand is that share which I have received. But that share के लिए what price I have paid? One price I have paid to the company, जो right share का price चल रहा था. Another price which I have paid is to the person who has given me the right to take that right share. Was given me the right to take that right share, because until and unless I've got that exclusive right, I would not have able to purchase the right share. So for getting that right shares, I paid 5 rupees and I paid 90, and for me that share the price and that share the cost of acquisition for future purposes would be 95. Now when I will be transferring that share to someone else, for me I will take the cost of acquisition as 95. Is it clear? So here there are 3 scenarios, again summary. When the right share is actually acquired by the person in whose favor the right was announced, then whatever price he is paying to the company, that would be the price of the shares. That would be the cost of acquisition for the shares for future reference. But if he does not want to utilize this right and announce it that in the favor of some other person, then giving up the right entitlement is also kind of transfer taxable. But for that which you are receiving, the amount would be your full value of consideration, but your cost of acquisition would be nil because right को purchase करने के लिए you did not pay anything. For Mr. X, who actually purchases the right share, had paid 2 price. One was to get the right entitlement and then was the purchase price. So for him, the total price would be 95%. Clear? Period of holding, interesting. Period of holding, right share ka will begin from the year when I have been allotted to it. But period of holding, Mr. X ka will begin from the year when, will begin from the date when the shares were allotted. But the period of holding here, interestingly, here in right entitlement ka case is what we have to see, right? Right entitlement ke case mein, period of holding would be from the date. अब मेरे पास वो राइट कब इशू हुआ जिस दिन कंपनी ने अनाउंस किया. सो ऑफर डेट to re-announcement date would be my period of holding, and mostly that is short term because company does not give forever to decide. They give you a month or a so period, so mostly that is short term. So offer date to re-announcement date. This is not ESOP. ESOP because these are right shares. ESOPs are for employees. Right shares are for the existing shareholders. Assessee, Baba Shreya Dubey, assessee want to sell the right share at 105, he can do so. But पहले right share को तो लेगा ना. First, he has to acquire the right share, and we are discussing about the cost of acquisition. right? We're not talking about the sale price, but पहले उसको acquire करने के लिए तो cost of acquisition that has to be paid ना. So if the assessee has acquired it, for him the cost of acquisition would be 90. Now if he's selling at 100, 105, 120, that is not important. Share acquire करके if I'm selling, that is a normal sale purchase, but what is the cost of acquisition for that share which I acquired is I have to see. So right shares case, whatever is paid to the company. Here the asset is not shares. Here the asset is entitlement which I had, which I gave up. Here it is the entitlement. Here this is the shares. Vrinda, for X period of holding would be from the date he has allotted the shares. यहाँ पे X has not sold it. From the date he receives the allotment of the shares, तब से the period of holding will begin till the time he will actually transfer it. Good, you're answering this question. कि कब से कब तक the things are getting in place. Clear हो गया? So this is all about cost of acquisition in various scenarios. General scenario like shares, bonus shares, listed equity shares, and your what else with it? Your intangible assets, cost of improvement we discussed, how to compute we discussed, indexation we discussed. Now we proceed further. STT would not be allowed. Now we proceed to a concept back to certain things. Back to our class 1, back to our charging section. Profits and gains arising from the transfer of a capital asset. Transfer we understood. Profits and gains arising from the transfer of a capital asset. Transfer का मतलब we understood. Capital asset का मतलब we understood. Effected in the previous year will be chargeable to tax and we had capital gain, and shall be deemed to be the income of the previous year in which the transfer took place. So they are saying that if there is a transfer of a capital asset, it would be taxed in the year when the transfer took place. When the transfer took place. Taxability would happen in which year? When the transfer took place. But there are students certain exception to this point. There are certain exception to this point. What is that? See, I told you year of taxability. Year of taxability would be what? Year of taxability would be the year of transfer. Correct? Yes? Okay. But there are certain four very interesting, and please, I want everyone on the screen, 4 very interesting situations where the year of taxability would be different from the year of transfer. What did I say? Where the year of taxability will be different from the year of transfer. So, कोई भी question करते time, what 4 things which you look for? The year of transfer, the year of taxability, full value of consideration, cost of acquisition, period of holding. 5 things, right? This is what you look for always in doing the question. So now let's understand it. First typical scenario which we are covering is section 45 subsection 1A. Section 45 subsection 1A. Everyone on the screen, please focus. ध्यान से step by step we'll do, not a problem. Next 15, 20, 30 minutes में let's try to cover it. Concept समझोगे अपने आप, the thing would be easy. (45) 1A. Money received on as insurance on damage or destruction of an asset. Damage or destruction of an asset. Or damage or destruction of an asset. अब क्या हुआ कि my asset got damaged, my asset got destructed. Destruction and damage कब होता for you when there is any natural calamity, when there is any natural calamity, when there is any war, when there is any war or enemy attack or riots, or when there is fire. Natural calamity में सब आ जाएगा, flood, earthquake, cyclone, सब आ जाएगा. So natural calamity, there is fire, there are riots, or the enemy has attacked it. The enemy has attacked it. ठीक है, उस केस में my asset can get destroyed, right? उस केस में my asset can get destroyed. What will I receive? If it is insured, I will receive an insurance. I will receive an insurance. Clear? So whenever an insurance is being received, there becomes a taxability on destruction of an asset. The capital gain gets interrupted. Extinguishment of right, extinguishment of asset may, if you're receiving any amount which is insurance, here then the taxability gets triggered. Taxability gets triggered. But again, we are looking for three answers. Full value of consideration, cost of acquisition, period of holding, transfer, and taxability. This is what we are looking for. पहले तो समझ आया कि हुआ क्या, right? कि डैमेज हो गया, right? डैमेज हो गया, अब क्या मिलेगा? इंश्योरेंस मिलेगा. So the full value of consideration would be what? What I'm getting is the insurance amount. So whatever the claim amount is received, that would be my full value of consideration, right? Cost of acquisition would be what? Simple, Baba. Whatever cost was acquired at. The cost of acquisition would be the cost at which it is acquired. Correct? Yes. Period of holding. Period of holding हम कब से लेते हैं? From the acquisition date till the transfer date. Right. Now, when the transfer has happened, when did the transfer happen? When the asset was destroyed. When the asset was destroyed. So the period of holding would be from the date when it was acquired till the date it was destroyed. Correct? Destroy हो गया, extinguishment हो गया, now it's no more an asset. So the period of holding would be computed from that period to that period. But taxability, now these are the exception to year of taxability being the year of transfer. Why taxability has been deferred? Taxability is deferred. Please listen carefully. Taxability is deferred to the year when the insurance amount is received, actually received. Why so, ma'am? Because claim is such a situation where you do not know whether you will receive it or not, number one. If you know you will receive it, you do not know how much you will receive it, right? So the taxability would be in the year when it is actually received, But transfer has happened when it was destroyed. The transfer has happened when it was destroyed. So it becomes very, very, very crucial that the indexation would happen. So let's take an example. I had purchased an asset in previous year, 15-16, but it was destroyed in fire in previous year, 19-20. बीच में कोविड आ गया, I did not get the claim for good year, the office was not working, I got the claim in previous year 21-22. The period of holding from is this period to this period to see whether it's a long term capital asset or a short term capital asset. Full value of consideration हमें मिल गया, insurance amount, cost of acquisition obviously at what we have acquired it, right? But taxability would happen in this year. Taxability only is deferred. How do we calculate it is not changing. I'm repeating it. Only the year in which you will offer it to tax has been deferred. The calculation has not been changed. The calculation has not been changed. That means when I'm taking it in previous year 21-22, the cost of acquisition would be indexed based on the year of transfer. CII for year of transfer and CII for the year of acquisition. So in the taxability year also, the CII which I would be taking would be the CII for 1920. And here the CII for 1560. But ye kaun se saal mein I will show? I will show this in the previous year 21-22. A question mein kya hoga? All the CIIs would be given to you. You have to see whether I have to pick the CII for the 1920 or pick the CFI 21-22. Again, the taxability, offering it for tax is only deferred. How the way it has to be computed is not changed. The way it has to be computed is not changed. Only the deferment has come for the taxability. And why it has come? Because insurance means you do not know when it would be received. So, but transfer to ho gaya, asset to destroy ho gaya na 2 years pehle, right? Asset has been destroyed. Transfer happened at this year, at this date. But taxability is deferred. If you understand it, coming 3 would be easier. If not, it would be tough. I'm coming to that, but first let me know if this is clear. सुमेश, कॉस्ट ऑफ एक्विजिशन आप बताओ ना, आपका सिंह के एक्स बंदे का एक एसेट हैज बीन डिस्ट्रॉयड, उसके लिए कॉस्ट ऑफ एक्विजिशन क्या होगा? The price at which is acquired, the full value of consideration जो उसको मिलेगा would be the claim amount, not the policy amount. The cost of acquisition would be the cost which it has acquired at. We are talking about the asset. Insurance is not my asset, but I'm coming to it. If it is not insured, insurance is not my asset. Capital, the stock or whatever I'm talking, not the stock, capital asset is my asset. Or suppose building you're talking about, then that is my asset. The insurance policy is not my asset. Okay, Sumesh? Now you will say, ma'am, what if insurance किया ही करवाया ही नहीं था, या insurance was not done, or there was no claim received? Baba, if there was no claim received, this section would not come in picture, because the section, the heading clearly says money or other asset received under an insurance from an insurer on account of damage or destruction of any capital asset as a result of all those things, as a result of these things. So only when a money is received, when no claim is received, whatever loss you're suffering would be a dead loss. You cannot claim it anywhere. You cannot say that the full value of consideration is 0. No, it's a dead loss. If no claim is received or if there is no loss, then you cannot help it. It may happen that instead of insurance, you are selling it at a scrap policy, then the fair market value you will take. Clear? Now next concept पे चलते. Next concept is very technical and is very important for the point of view of question. Please, everyone on the screen, conversion of capital asset into stock in trade. Conversion of capital asset into stock in trade. Again, we will look for what? Full value of consideration. We will look for cost of acquisition. We will look for year of transfer. We will look for period of holding, and obviously we look for year of taxability. Right? अब ये देखते हैं. Conversion of a capital asset into stock in trade is what? Is a transfer as per section 247. First day we read that a conversion of a capital asset into stock in trade. इसका best example we'll take jewelry in mind. I'm a jeweler, so घर का jewelry को I made my stock in trade. I made my stock in trade. Okay. So the moment conversion happens, that is a transfer. That is a transfer. So the year of transfer would be the year of conversion. Because as per definition of transfer, conversion of capital asset into stock in trade is a transfer. So the year of transfer would be the year of conversion. Jewelry है मेरे पास, cost of acquisition क्या होगा? It's my capital asset. Capital asset into stock in trade. Stock in trade is not a capital asset. So capital asset jewelry hai. Think about yourself as a person holding jewelry. So cost of acquisition would be the price at which I have acquired it. मैंने जब खरीदा उसका acquisition price, right? This is okay. This we all know. But full value of consideration क्या होगा? What would be the full value of consideration? Full value of the consideration would be FMV on date of transfer. On date of transfer, that means FMV on date of conversion. FMV on date of conversion would be my full value of consideration. FMV on date of conversion would be my full value of consideration. So period of holding क्या होगा? Period of holding simple. From the date it was acquired. अब बाबा वो acquired by previous owner हो या ना हो, वो concept would be applied. Okay. So acquired till the date of conversion. Acquired till the date of conversion. That would be my period of holding. But year of taxability. This is what is the problem, because this is what we're discussing. Is the exception to the general rule that year of taxability is the year of transfer. So iska exception number 2, which is conversion of capital asset into stock in trade. May year of taxability would be the year in which this stock in trade is sold. The year in which this stock in trade is sold. Why? First of all, why? Capital gain hota, you would have been given tax on it. But logically, government says, logically socho, the year you have converted it, did you receive any money in real? Did you receive any money in real? The answer is no. The government says, okay, till the time you actually receive any money in real, we will not take tax from you. Jab tak aapke paas there is no cash inflow, we will not take tax from you. When will cash inflow happen? When this stock in trade is sold. When this stock in trade is sold. So when the stock in trade is sold, then the taxability gets triggered. The taxability is deferred till that point. But taxability will happen till this point only. Taxation will happen till the period of holding only, and that is year of conversion. So how would be my capital gain computed? Simple. Full value of consideration, which is FMV. Again, if I've converted it in the year 2019-20, but I have sold it in the year 2021-22. So FMV would be my full value of consideration. less cost of acquisition into, if it's a long-term asset, then CII for the year of conversion when the transfer has happened, because always we take CI of the transfer. Always we take CI of the transfer, not the CI of the taxable year. The CI of the year of transfer, which is 1920, upon me CII of the year when it was acquired. Suppose it was acquired in 1450. This would become my capital gain. But this will happen only when the year of taxability would be, आप इसे compute कब करोगे? In previous year 21-22. Except taxing it in that year, 21-22 is not having any impact on how the taxation happens. It is only getting taxed in this year. 21-22 का taxation पे कोई impact नहीं आ रहा, except that it is the year of taxability. Am I using 21-22 here? No. Am I using 21-22 here? No. Am I using 21-22 here? No. FMV is my full value of consideration. Simple. But one thing, students, this is very important, which students miss. I told you, when you sell stock in trade, in that year you have to calculate capital gain. In that year you have to calculate capital gain. Now listen carefully. Take this example. Please listen carefully. I had acquired this jewelry for 2 lakhs. FMV on date of conversion is 3 lakhs. I have sold this jewelry. This is acquired in 1415. This is in 1920. This is in 21-22. I have sold this jewelry for 5 lakhs as a stock in trade. Convert किया 1920 में. अब एक बात बताओ, आपने calculation कैसे किया? You did capital gain the calculation in which year? In 21-22. You did 3 lakhs minus 2 lakhs into 1920 का CII, which is, एक बार देख लेना please, 1920 का CII, और यहाँ पे I took 1415 का CII, correct? And then I calculated the gain over. No, एक और चीज भी तो हुआ है. Another thing has also happened ना. This is the capital gain. This is the capital gain happened on 3 lakh rupees. But Baba, one more thing has also happened. That is the stock in trade has been sold. The stock in trade has been sold, which is being sold at 5 lakhs. और उसका cost क्या था? This FMV. This FMV. So 5 lakhs minus 3 lakhs would be my what? Business income. Would be my business income. Two things that happen, student. Please try to understand it. One is the business income which happened. One is the business income which happened, which was happened on this. अब business के लिए purchase price क्या हो गया? This 3 lakhs. Business के लिए purchase price क्या हो गया? 3 lakhs. Right? Correct? Business के लिए the value at which I will lock it in my stock would be 3 lakhs. And I've sold it for 5 lakhs. So 2 lakhs का तो business profit होगा. Capital gain has applied on this 3 lakhs and this 2 lakhs. 3 lakhs को मैंने taxable किया as CII on the year of transfer upon the CII of the year of acquisition. But this happened in previous year 21-22. And this happened in previous year 21-22. So can I say when a capital asset is converted into stock in trade, the taxability will happen in the year when stock in trade is sold, and there would be 2 types of income. What would be the business income, which would be the difference between the sale price of stock minus the FMV, right? And another would be the capital gain income, which would have been taxed earlier, but now as per provision of section 45(2), it is getting taxed, and it is getting taxed in the year when it is sold, and the year when the stock in trade is sold. But remember this, CII would be always of the year of transfer, and the transfer has happened when the conversion has happened. Clear? If stock in trade is sold in part, that means 5 lakh का jewelry था, उसमें 2 lakhs का jewelry था, उसमें there was one ring and one pendant set. Pendant set has been sold, ring is still unsold, so खाली pendant set का capital gain would be computed. Till the time stock in trade is not sold, capital gain would not be triggered. The taxability would not be triggered. And the reason is the government says, okay, once you have some cash inflow, then pay tax to us. It can happen year of taxability and year of transfer may be the same, then सब कुछ same year में हो जाएगा. Clear हो गया? Shreya Dubey, is it clear? Remember the extinguished assets जैसे destroy हो गया ना बाबा, जैसे insurance के case में the asset is extinguished. Riya, till the time the idea here is deferment of taxability of capital gain, and we have deferred it to the time when stock in trade is actually sold. Why the government has deferred it into the time when stock in trade is actually sold? Because government say, okay, first have something in hand, kuch kamalo from that conversion, then only we will tax it. Because mere conversion is not giving any cash inflow to you. Mere conversion of capital asset in stock in trade, is it giving any cash inflow? No, it is not giving any cash inflow to you. So that's why we will not tax it till the time you earn anything from it. See, students, again and again and again, and I'm saying the taxability only is getting deferred. How you have to tax it, period of holding, year of transfer are the same. Only the taxability is getting transferred. PGBP में PGBP वाला पार्ट जाएगा, which would be business income minus FMV of conversion, because cost business के लिए क्या हुआ, the FMV. अच्छा, अब एक और चीज एक्सेप्शन से हटके, this is not part of exception. किसी ने, no one asked about, ma'am, what will happen when ulta things happen? Ulta thing happen means now stock in trade is converted into capital asset. Same thing, you are a jeweler. Stock in trade को आपने capital asset में convert कर दिया. This is not an exception of section 45. I'm repeating again, but a related concept which will help you getting confused, or which will help you having that clarity that you have to understand the concept. I'm a jeweler. My jewelry was my stock in trade. Now I have use it as a capital asset. मैं घर पे ले आई. Now personal effect हो गया. What personal effect makes jewelry is a capital asset, correct? So what will happen now? Remember, as per section 28, whenever a stock in trade is converted into capital asset, there is a PGBP income. There is a PGBP income. Whenever a stock in trade is converted into capital asset, there is a PGBP income. Section 28 may be discussed, and that is FMV minus purchase price. FMV minus purchase price, correct? So FMV जो भी conversion की date पे here होगा, that minus purchase price would be my PGBP का income. Is it clear? Yes. Now it has become my capital asset. Now it has become my capital asset. Again, you will look for is capital asset for when I will sell. When I will sell, whenever I will sell, there would be capital gain, correct? There would be capital gain. But is capital asset ke liye, what would be my full value of consideration? Whenever I will sell it, whatever I receive would, or whenever I transfer it, I should use whatever I will receive would be my full value of consideration. But what would be my cost of acquisition? The cost of acquisition would be FMV on date of conversion. No need to ratify, student. Think about it. पहले कोई चीज stock in trade थी. Now it has become my capital asset. Something was stock in trade earlier. Now it has become my capital asset. Did I pay any price to acquire it? No. But the cost of acquisition would be FMV. Why? Because FMV को मैंने taxable कर दिया. I have already given tax on it as PGBP income. So now I can take the benefit of it as a cost of acquisition. I can take the benefit. When I take anything as cost of acquisition, I'm taking the benefit, right? So now I've already paid tax to the PGBP income. Fine. Now I can take FMV on the date of conversion as my cost of acquisition. From when the period of holding will start for this capital asset? From the date it is converted to the date it is actually sold. From the date it is converted to the date it is actually sold. From that date, the period of holding will begin. From that date, the period of holding will begin. Correct? Yes or no? Yes. So बस तब से तब तक आप capital gain निकालोगे. Simple. Nature would depend upon that. So this is an exception to general taxability, which is conversion of capital asset into stock in trade. General rule of taxability is what? Year of taxability is equal to year of transfer. But this is an exception where you're converting a capital asset into stock in trade, where you defer your taxability till the time stock in trade is sold. But this is not an exception. This is a general understanding which you have to have it for an asset which was earlier stock in trade. For an asset which was earlier stock in trade. Usme cost of acquisition, you should know कि क्या होगा FMV on date of conversion. जिस दिन से वो मेरा capital asset बना, from that date I would be calculate my period of holding. When did it become my capital asset? From the conversion date. See the difference between both. Correct, Namrita. Whenever we are having a capital asset converted into stock in trade, in the taxability year will have two types of income: business income and your capital gain income. FMV would always be given to you in your question. You do not have to worry about the FMV. Absolutely, Sudha. Make a demarcation. Kab it is becoming a business asset, kab it is becoming a stock in trade, when it is becoming a capital asset. Make that demarcation. And that demarcation may obviously, since it is happening between the same assessee, the stock in trade into capital asset or the capital asset into stock in trade, there is no real flow. But FMV is all what becomes important. FMV on date of conversion is what becomes important for the business to understand its cost price, or for the assessee to understand its cost of acquisition, or the fair market value, or the full value of consideration. Point C, agar aap ratta maroge, you will forget it. But agar aap clearly understand karoge what is happening, write it down, what is happening, think and ask those questions. What is the full value of consideration? Kya mil raha hai? Think that ask that from yourself. You will definitely get an answer to it. But if you will just think कि अच्छा ऐसा है तो ऐसा होगा, ऐसा होगा, ऐसा होगा, you will definitely forget it or definitely mix it up. What I'll do is I'll leave you on this today rather than discussing the other two exceptions to section 45. I'll leave you on this today. Ponder on it. Do it because there were some concept we discussed section 48, 49, section 50, 5, we discussed section 45(1)(a), section 45(2). There is section 45 and 45(5)(a), which I'll pick it up later. But for you, what your homework is, do all the questions in relation to it. Section 50 हमने अच्छे से we discussed while we were doing PGBP. Do that. Section 50C, read that also. Section 50C is about your difference when we talk about stamp duty value and cost of acquisition was same. It is just same like your 43CA, but only thing is 43CA mein we had special COVID provision that is not here, 120% wala. Okay, so do that. We'll pick it up from 45(5) in the next class. But one surety would be there that you have understood 45(1)(a) and 45(2). 45(2) is very important. Do not try to skip it. It is a very, very, very important concept. Okay, so tomorrow, since we have a consecutive class, so tomorrow we'll pick it up from there and we'll try to solve it. Because I want you to absorb this concept, and that's why I'm not picking up another latest section. Okay, so see you in the next class. But next class again, we'll start from where? We'll start from 45(5). 45(5)(a), we'll 50CA is your homework. Usme एक concept है which I'll touch. 50C is your homework. 50 we have already discussed, so we'll pick up from section 50B. Yeah, we'll pick it up from there. 50B and 50B se we'll pick it up. But in the next class, it would be a longer class. We'll try covering our whole concept of capital gain if possible. तो अच्छे से समझ के absorb the things. Okay, thank you. See you in the next class. Thank you, sir. Sir.